There are many fund houses that take care of your money and help you build fortunes. But what about the force behind them? How do the top CEOs go about investing their hard-earned money? With an aim to understand how ACE fund managers invest, we are starting My Investment Portfolio episode, wherein we will speak to top leaders and find out more about their strategy. So today on our first episode of My Investment Portfolio, we have Suresh Soni, CEO of BNP Paribas AMC, joining us now. Good evening, Suresh, and thank you so much for joining the ET Money Show. The first question for you, obviously, is tell us something about your first investment, the very first investment that you made in your financial portfolio.
Thank you, Kavita. Delighted to be talking to your viewers. I'm fortunate to be in an industry where the virtues of investing comes easy and natural to us. So I must say that coming from middle class background, saving was something which was known to us, the virtues of saving. But what this industry taught me is the virtue of investing and starting early. And while my initial investments were typically for tax-saving purposes, but sometime about late 90s and early 2000 is when I realized the power of SIP and started making SIP investment. And that has helped me in a very good state. And that is something that I've continued even till today. So the fact that you can make long-term investments using the mutual funds is something that I realized pretty much early, I would say, and I've stayed the course and it has worked extremely well for me.
That. Now, considering the current scenario in the market, what exactly is your asset allocation like in your portfolio?
So, Kavita, I tend to be more like 60-40. I want to grow my money, but I also want to be able to withstand some volatility in the market. So I kind of allocate between equity and fixed income. I'm generally a financial assets investor. I don't invest too much into physical assets. So yes, I have a house, but that's more a house that I live in, but I don't make investment in real estate. Gold, of course, is what my wife decides, and that's something that we do more as a investment consumption, if you may. But otherwise, investing is all into financial assets and equity and fixed income in 60-40 proportion.
All right, Suresh, a lot of advice we keep on giving to our investor that if you want, you can rebalance your portfolio looking at the current scenario in the market. But then talking about the same scenario, have you rebalanced your portfolio lately? If you have, then how?
So I broadly keep my portfolio in this zone. Only thing that I've done in the last, let's say about a year or thereabout, is the incremental investment that I made has all gone into equity because the markets have gone through some amount of correction over the last 12 months. And I used that opportunity to kind of raise my equity allocation a little bit by putting the fresh money to work more in equities. But otherwise, 60-40 is broad brush what I generally stay in.
All right, Suresh, often is said that one needs to have a fixed income portfolio also, or maybe you need to balance your portfolio by having a little bit of debt in it. So how does your fixed income portfolio looks like currently?
The fixed income exposure was wise. I just tend to bucket it in a couple of portions. The one which is the, let's say, liquidity requirement, which I could use anytime in the next 6 to 12 months, is generally kept in liquid or ultra short-term funds. But beyond that, the money is either invested into some of these, let's say, VPF, voluntary portfolio, or PPF schemes, which to the extent that those are tax-friendly and tax-free income. And I also use extensively about 2 to 5 year maturity mutual funds because that mutual funds provide, again, a fairly tax-efficient fixed income return with a diversified portfolio. So that's the area that I use.
The reason we make an investment portfolio or we follow a disciplined pattern towards our investment, Suresh, so that we can finally accomplish a financial goal. Now, with the kind of portfolio you have, did you actually fulfill or you got to fulfill your financial goal? If that was, then what was that goal?
So obviously, as I started working, and which is what will happen with most salaried people, house was one big goal. And I did start saving up for that sometime early in my career. And over a period of time, it worked out well, and I was able to use up my savings to make the down payment. And of course, I took some amount of housing loan to achieve my buying of the house.
All right. In the end, Suresh, word of caution or advice to our investors or viewers from your end?
Some volatility, bad headlines, and as a result, market comes down. Keep in mind that markets come down, but they don't stay down for too long, and therefore you should be looking for that as an opportunity to invest. And second, I think one of the biases that all of us have, and some of the investors who are investing in stock, one of the biases that we have is our holding cost bias, and I think be careful about it. Your holding cost is nothing but a random number in the price chart of a stock. So don't make your investment or divestment decision just because you bought a stock at a certain price and it's either gone up or down compared to your purchase price. Make an assessment of what the company is worth and then decide on whether you want to hold on to the investment or you want to book profit or loss rather than just looking at your price. So consider volatility as an opportunity. Don't deviate based on everyday movement of the stock market. Stay focused on long term. And of course, when you're investing in stocks, don't get, let's say, over uh, emotional about your purchase price or entry price. I think that's just in the life of the stock, it's just a random number. So stock doesn't care what price you bought it at.
It was a quick rapid fire round on my investment portfolio. Thank you so much, Suresh, for making time and helping our investors out.